What's going on, traders? In this video we'll go over price action trading without any indicators, and we're going to use S&P 500 mini futures as a chart. The first thing we need to do before we start trading is we need to correctly identify the market structure. There are three options that we have. It can be either uptrend, it can be either a downtrend, or it can be a trading range or some sort of variation of these three patterns. This was the area before the market opened. At this point on, the market opened regular US stock market hours. So pre-market analysis was a bearish downtrend because we can see a series of lower highs, lower lows. So only thing that market is indicating to us that we should be thinking about opportunities to sell, but we just don't want to sell anywhere on the chart. We want to sell the two-legged pullback at the proper key entry point. Key entry point is EMA, trend line, or support or resistance line. When I was looking at the chart initially, I had my trend line like this. I had a break, I had a new extreme form, and I was expecting correction or possibly straight up reversal. So when I was looking at this live, there was a new low and there was a first attempt by the sellers to sell, little pullback, second attempt to sell, but this is far away from both key entry points, and I had the break at a new extreme at the time. The market created a micro double top which reset the count, and there was a first entry short, pullback, a second entry short. Now, as the EMA is holding at that point on, it is starting to get obvious that there is not going to be any reversal. So you have to switch and adapt to the market. And basically, once market made its way all the way up to here, this is where I adapted and adjusted the trend line to make it look more fitting like this. And this is a large downtrend that was the play. But back to this trade right here. This is a second entry short off the exponential moving average, which is indicating rejection of price, but the signal bar is very neutral doji bar. When I'm going short, I want to see a bearish momentum. I want to go short below bar like this. I don't want to go short below bullish bar or the doji like bar. So for that reason, this entry is worth skipping. It was quick, easy scalp, but nevertheless, you need to pay attention to the momentum that is showing you around the exponential moving average. From that point on, after there was a quick, easy scalp, there was a huge bullish rejection of the lows, and this is going to be an important pattern today that I want you guys to pay attention to, because something's not right here. We were supposed to push all the way down here and create a strong bearish downtrend, and the instant next bar was a gigantic bullish full-on reversal bar, and that shows you that something is not right when it comes to bearish momentum. And at the same time, you guys can see that we are part of this consolidating structure. There was no clear direction for quite some time at this point on. EMA is starting to flatten out, starting to get into the middle of those bars, and for that reason, once there was an additional doji and the lower high of this second entry form, which lower high in the downtrend is normally a great setup, you want to sit on your hands while the market is consolidating and the EMA is completely flat. This area is a congestion, and the best way you trade this congestion, and the only reliable way, is to fade the breakout. You don't want to fade breakout to the downside because the trend is down. You want to fade the breakout, and fading means trading it against its direction. So direction of a breakout was to the end. If you want to fade it, meaning we are selling it. It's a little bit counterintuitive, but most breakouts of these consolidation areas will fail. Everybody has their stop orders above this resistance right here, and all the stop orders got triggered and it dragged market back down. So this was the first failed breakout of this congestion. Nevertheless, you guys can see I'm still not marking it because the overall sideways structure was quite strong, and I still don't think this could be classified as a safe entry based on how indecision strong was. The market pushed to the downside. There is a new low, there's a first entry short, second entry short. So this is the two-legged pullback that you're paying attention to, but it's far away from both key entry points. So just sitting patiently and take a look at this pattern right here. This is a breakout pullback pattern on this bar right here, because this is a consolidation area. Market pushed lower, broke, pull back to test previous breakout area, and you have two key entry points holding exponential moving average and the trend line. And the bias is still bearish. This would have been a great entry had we closed below EMA, and this was much better bearish bar. But take a look what happened. This is the new extreme. There's a first entry short, little pullback higher, second entry short. You guys can see all these high probability setups. This is basically the second entry at the key entry point. So this was the first high probability good setup for today before the market opened. You can make a case for even taking this entry, because this is once again, this is a failed breakout out of this consolidation. This is a congestion area. You broke higher and you want to fade the breakout. Had this signal bar been better, it would have been great entry. This signal bar was unenterable in live because it was way too big, almost 5 points. But it was a quick, easy scalp, and you have a break and a new extreme form for the downtrend. And after break and a new extreme, you expect a correction or straight up reversal. So expecting these two things. If EMA is going to hold, you can get a resumption of a trend, but that's only if the EMA proves that it's holding. At this point on, market opened and the volatility extremely spiked up, and there was no safe entry at this point on. You guys can see there's additional consolidation, and this is quite a theme for the day. We already had 3 consolidating areas, but you want to stay away from this because around the open the market is going to most likely give you some sort of trap. There, you know, all these setups happen extremely quickly, so there was no way to enter properly, and you would just want to sit on your hands. But once again, you got 10 bars going sideways. There is no safe entry in between, and the best thing to trade this congestion, you want to fade the breakout. Breakout is to the upside, and overall bias was down, so you're not trading with the direction of a breakout. Your intention is to fade the breakout. But remember, we just had a break and a new extreme, so it is too early to fade this breakout yet. Both of these breakouts were still with the direction of a trend. Now we have a new low, so I'm being a little bit more patient, and there was this pullback below EMA which confirms the bearish momentum, and there's a lower high setup. You ticked one tick higher or a few ticks higher, instantly reverse down below EMA. This is a lower high of this failed breakout, which is lower high is a confirmation setup of this failed breakout. Lower high is a confirmation setup in general of second entry, reversal pattern, or failed breakout, or double top and double bottom. So you guys can see how strongly we push below EMA and market gave us higher lower high below EMA, big bearish bar. Once again, this was unenterable in live markets because it all happened way too quickly, and the market never looked back and continue pushing lower and continue pushing lower. Once the market is pushing lower like this, and I have a break new low and I have another new low, this is overall indicating to me that the structure is going to be more bearish than I had initially anticipated. So what I'm going to do, I'm going to find a slightly flatter channel because overall bias for the day seems very bearish like. And since we pushed now below EMA, this is the last nail in the coffin that I don't want to be looking for longs. Only thing that I'm looking for is a bunch of second entries at the key entry point. So market created a new low and you have a first entry short that worked, first entry short, pullback, second entry short. Finally, you have a nice two-leg gap pullback at the key entry point. This is the second entry short. The uptrend played out, which is now indication that the buyers are no longer in control. And once again, this, I can't seem to mark this, is a high probability setup because you're with the direction of overall trend. You're taking a two-leg gap pullback at the proper spot in the market, and this will a lot of times generate a very high probability setup. You want to stack odds on your side. You're not interested in selling low on a bunch of first entries. The market continued pushing lower, so you keep marking these trend lines on the chart. So what you're doing as market is pushing higher, you're still counting for the second entries. You have a new low, first entry short, second entry short. But take a look at this difference. This second entry is different from all of these second entries. Why? Because now you push strongly above the exponential moving average. Here EMA rejected price, here EMA didn't put any rejection. This already indicates strong bullish momentum, and I'm not going to be selling while we are above the EMA. Only time it's okay to sell while you're above the EMA is when you're at the key entry point, mainly when you're at the big trend line for the day. So price broke the trend line, created new extreme. This looks like a two-legged pullback up, and you guys can see this spike and a channel is in play. There's the new extreme and there's a first entry long pullback. As the market is pushing lower, your indication is that you're going to be waiting for a second entry long that is going to fail. Why are you looking for failure? Because uptrend played out with the break and a new extreme, and overall bias is down. Take a look from this very beginning of overnight session. We've been trending to the downside, so I'm not looking for second entry long here. I'm looking for trap. A lot of people are going to get trapped at exponential moving average. However, in this instance, market was so weak that it didn't gave you opportunity to jump on the failed second entry long. And market just push lower, and you have a failed second entry long all the way down here. This is the new high, first entry long, pullback, second entry long. But this is at this point on now unenterable, because when you're taking a failed second entry long, you want it to happen close below EMA, near below EMA, and you don't want the market to move all the way down. You don't want to miss the move. You don't want to chase the market because of FOMO. You want to, be patient and take the entries below the EMA or somewhere around here. Here is already way too down. So once again, bias still is bearish. This is the first major break for this overall downtrend. So you're expecting for new low to be formed. You guys can see you have a new low, you have a first entry short, you have a second entry short, you have a horrible doji bar that is not touching the EMA. Then you have this bar, and if you get a trigger below this bar for entry, for this second entry short to trigger, this would have been a good entry to take. Good entry to risk. You're still far away from EMA, so you're taking a chance, you're taking a risk here, but it is worth it. But you never get the trigger market pushed higher, and then you have a third entry short, which is not really high probability setup in itself. So you're going to have to skip this trade, unfortunately. It is like the exponential moving average, so you're watching the price, how it's reacting, and you see a strong bearish momentum down, already indication that the market is very weak. You have a new low, you have a first entry short, pull back, and you have a second entry short of the exponential moving average. EMA is still holding. This trend line now is coming to play. Even though you have a break, you're working to get the new extreme, the trend line still keeps holding. So this is a very good indication that this setup is safe for me to take. And notice how I'm not just cherry picking these trades, because even though I have EMA here, this is just a third entry. This is a proper second entry after a nice bearish correction, and you have a new high, first entry long, pull back lower, second entry long, failure. In a downtrend, EMA still holds price. This was my first trade for the day, and this is a high probability setup. You still have room to these lows, so you're safe to trade it. By the time you get this new low, first entry short, second entry short, you're way too close to this micro triple bottom or double bottom, so you don't want to take any entry at this point on. You're also starting to get a congestion, and you have to be careful when it comes to these congestion. And market pushed lower and broke lower and never looked back. So I'm going to draw these short-term trend lines with the direction of a trend. I'm going to once again draw the short-term trend lines that are corrections against the trend, because I want to stay on the right side of the market. And you guys can see you have a new low right here, you have a first entry short, pull back higher, you have a second entry short. And I want to talk about this setup right here, because this is a very similar to what happened right here. You could have taken this trade and you would probably done nothing wrong, because in order for you to skip this second entry short, you need a little bit of experience, because after you have such a big bullish bar rejection of price, you're starting to feel something that going short right here is not something you want to do. But once again, you only need a little bit of experience, because you already have a break. You have first leg, pull back, second leg to a new extreme, 2 legs down, and a new low was formed. So you know that it's starting to get riskier to take sell. And after you push lower and created the big bullish bar, similar situation that happened right here. You have a second entry short, but you have a gigantic bearish bar afterwards, and then you have a lower high which you don't want to take. And a similar situation happened right here. Take a look, guys. You have a new low, you have a first entry short, pull back, a second entry short, but you have a gigantic bullish bar. You're supposed to push lower, and you're not supposed to have such a gigantic reversal bar. And you have the same situation right here at the very beginning. This is why you want to stay away from this trade, for this reason, for this big bullish bar here, this bullish bar here, and this bullish bar here. However, if you took this trade, I'm going to mark it, because you only need to have a few years under your belt, so you're starting to feel the nuances. But you can see a break, 2 legs to a new extreme, and you need to be a little bit more patient here. But if you took this trade, don't worry. You try to go short on a second entry short, and if you take all these second entries, you're still being fairly okay. So I'm going to draw the short-term trend lines. Market is reversing out of nowhere, the volatility change, and you need to adapt to the market. All right, there's trend line working higher. Once you see this big spike working higher, and you see a break and 2 legs to a new extreme, you need to switch the gears. You cannot hold on to previous trend that already played out with the break and new extreme. And plus, you move way too far up for market to create a trap and reverse down. So only thing at this point on you're looking at is a second entry long at the key entry points. Here you're looking at a second entry short at the key entry points, or you're looking for a second entry long at the key entry points. So I'm going to draw these shortened trend lines again. I like something like this, kind of like a 2-legged pullback. However, this is just a first entry, unfortunately. And you have a new extreme, you have a first entry long, pullback, second entry long, trend line is holding, you're close to EMA. Also, this is a failed second entry short from this low. You have a first entry short, second entry short, failure. So this is a first bullish high probability setup. Only thing with this trade once again, and today was very typical, today is extremely hard to catch a lot of these setups because the signal bars are big. Today volatility was insane once again, almost 5-point stop. A lot of bars were too fast to enter. All of these bars from the beginning are too fast to enter. This bar is way too big. A lot of bars are big or too fast to enter. So you're going to miss a lot of trades during a high volatility like this, but it is what it is. There are going to be a few days like this, but hopefully you guys understand the structure is bullish, two-legged pullback, and a failed second entry. Short market is strongly reversing higher. There's just a bunch of first entries far away from any key entry points, which you are not interested in taking. You have a new high. You have a first entry long, pullback, second entry long, but take a look. 1, 2, 3, 4, 5, 6, 7 bars going sideways. EMA is getting flat, and these bars are literally overlapping. There is no room between. This is a pure congestion. You created a new high, first entry long, second entry long. Once again, 10 bars going sideways stacked without any room in between. This is a horrible congestion. Same thing as here, these consolidating areas. And remember what you did during these consolidated areas. You faded the breakout with the trend. So as tempting as it was, and I really expected for market to push higher here, I have to stick to the rules. I was burned so many times on these congestions. I cannot force myself to take this. The congestions will take a toll on you eventually. So you have to stay away from these. You have failed breakout, and most breakouts of these congestions will fail. Just like you faded the breakout in a downtrend, you're fading the breakout with an uptrend. There is a higher low setup confirmation of this failed breakout. I was waiting for a failed second entry short, and I wanted to see a nice bar that closed above the EMA. You have a new low, first entry short, second attempt to sell in a strong uptrend. You just have a first break. You're expecting a new extreme form. So you're not looking for second entry to work because the context is bullish. Okay, always keep context is always more important than the pattern. So if the context is bullish and I'm waiting for this second entry to be a trap. However, this, look at it, look how it closed. Such a quite a neutral bar below EMA, and you guys can see how it struggled, but too bad. I still think this is a decent entry. Market is a slightly aggressive entry, but yeah, this would have been much better had it closed above the EMA. Market created a break, new extreme formed, and then you have a downtrend working lower with the break, new extreme. And this was the second trade that I took, and I took a losing trade because when I was watching this, and this was such a substantial uptrend, there's possibility for trend line like this, and take a look how nicely it fits off these lows, and it fits nicely here. I was still expecting that this is going to be a bigger uptrend, and this was the first leg pullback, second leg two-legged pullback, break, and a new low. So the downtrend played out. Same thing right here, two-legged pullback, downtrend played out. You have a higher low here, higher low here. I was still expecting for price to give me one more push higher. I got trapped here, market instantly reversed, and oh boy, what a runner this was, because they trapped everybody going long here. They trapped everybody at market, never look back. But once the market is going against your direction, you always have to accept the loss, put your stop loss below the signal bar and never move it. Just accept the losing trade and jump on board on the next one. You never want to keep moving your stop loss, because that's a losing strategy. You will blow your account if you're going to keep refusing to admit you're wrong and you're going to keep moving your stop loss. From that point on, market strongly reversed to the downside, so the context is changing. Context is bearish. You have a little break, you have a new extreme, and then you have a new low. You have a first entry short, pullback, second entry short. You have a textbook second entry short. EMA is holding, micro triple top is holding. This is a great trade. It looked almost too perfect to me. I was afraid that something's off here, especially after breaking a new low. I didn't take this trade. And I was a little bit expecting this bullish correction, but it happened a little bit later. I think because of this high volatility, it worked today. But this is such a textbook second entry. I almost thought there's something wrong here after breaking a new low. But you guys can see, after that point, you have this big bullish rejection bar like we talked about earlier in both of these setups. So you don't want to take this new high, first entry long, second entry long. Plus, once again, you're going completely sideways. This is a strong support. You don't want to take it. You have a failed breakout to the upside, and most breakouts of these congestions will fail. So this is a high probability setup. You have a gigantic bearish bar, and you're fading the breakout against the trend, and overall bias is down. So the same thing that happened right here, failed breakout right here, little failed breakout right here, another failed breakout right here, all right? And this is how you play this correction. You're fading these breakouts, these congestions. A lower high, confirmation of failed breakout. Lower highs are confirmations of these high probability setups. However, you're going short directly into the support. But take a look what happened. Market formed a second entry long. This is the new high. First attempt to go long, pull back. Second attempt to go long. It ticked higher and it reversed on a nice bearish bar. Everybody who went long here put their stop loss below here, and you know they're going to get trapped. You don't know that this is going to be a failure yet, but you have no other option than to take this trade. This is how failures work. You cannot wait for price to trigger the stop loss. You're already way too late. So the next bar in the opposite direction is considered to be a failure. And this was my last trade, because this is also new low, first entry short, second entry short. This is why this is stronger, and this is why I believe it is good to ignore this support. Had there been no second entry short, the failed second entry long would be questionable, but longs got trapped, and this is a second entry short below EMA. So this is, I think, worth scalp. Unfortunately, there was no runner. You have a break, new extreme on a larger scale, and for you're expecting correction or straight up reversal. And look at this strong bullish momentum indicating that there are no bears left in the market. So we have a new high, first entry long, pullback, second entry long with the direction of a trend. EMA is holding, high probability setup. Second entry long, also the downtrend played out, and this looks like two legs down that played out. All right, and here we are heading into the more confusing part of the day, because market push higher from here. So you have two legs up. You have to keep drawing the short-term corrections. But take a look how EMA is starting to get completely flat. A lot of bars going sideways, and this is starting to be very range-like. Honestly, I don't see any safe entry at this point on. This is just pure mess and indecision. Market eventually broke higher. You have to keep drawing the short-term trend lines. Market eventually broke higher, gave you a little break, little new extreme. You have a new high, first entry long, pullback, second entry long at the exponential moving average. And I like how you trapped everybody going short here. So this is a decent second entry long. But at this point on, seeing how market is getting very slow and starting to flatten out, I don't think it is safe to start trading this weird consolidating structure. You guys can see you have a last push to a new extreme. Once again, two legs up it looks like, and market is starting to hover around here, and EMA is getting completely flat. And I don't think it is smart to keep forcing trades at the later part of the day. But you guys can see how price is starting to act as a trading range. So you have no other option than to adapt to the rules of the trading range and keep drawing the short-term trend lines. And you guys can see you don't even have a breaks and a new, in this instance you have breaks and new highs that much, because the trading range is so strong that you're just going to get instant reversal. But you guys can see a failed breakout of this trading range. You have a new high, first entry long, second entry long, failure below EMA, coming off the low. So there are quite some setups, but I really don't think it is safe to trade on Friday this late. Such a confusing structure when you can have such a nice uptrend, you can have quite nice downtrend, and you can have easy setups right here. Overall, this was a trading range on a larger pattern. So for that reason, this larger pattern is invalid, because this is a trading range, move down, move up, move down, move up. So you want to stick to slightly tighter channels. All right, so hopefully the video was helpful. Enjoy the weekend, and I'm going to see you guys in the next one. Take care, buddy.